Of our guests today, we have Ashish Kyal, a wave strategy. Ashish, currently the stock is at 864. What kind of target do you have on this, and do you recommend that our caller on the show holds on to this stock right now?
Yes, absolutely. See, IRCTC has a dream run. We can clearly see in 2021, and the stock touched a high of 1250, 1300. No doubt it's an expensive play, but we can expect some consolidation. So since he's a long-term investor, I would suggest him to hold on to the stock. Hold it on for at least more than a year and a half, because that's when he can start showing again the uptick in the stock. And the stop loss on the downside over near term, he can place it at 750, and the target can be expected around 1000. This is from short term perspective, but I think over the period of medium to long term, the stock should outperform and do much better from the current levels.
All right, Bhavin, I hope that...
Absolutely. So the three stocks that I am picking up is Tata Steel, Tata Chemical, and ICICI Bank, two of which is in sync with what Shaina also said. So coming to Tata Steel, we can clearly see the stock has consolidated since the May of this year. It's just been underperforming, to be very honest, compared to the overall market. But I think that's a very healthy sign. So it's preparing the base for the next rally, and I think Tata Steel has the potential to reach towards that 1500 mark again on the upside. So one can invest into Tata Steel. The next stock that I'm going to pick up is going to be Tata Chemical. Again, it has been consolidating. We saw some kind of a profit booking happening, but that's a good opportunity to enter into Tata Chemicals right now. We can clearly see the sector as a whole has been an outperformer. And going forward over the period of 2 years, I think 2 to 3 years, the stock should also do much better. We can expect it to go towards the level of 1200. So Tata Chemical is the next stock that he can pick up. And ICICI Bank, definitely within the banking space, across the banking space, I think ICICI Bank has been one of the most outperformer and has the potential to even go higher from here on. It has managed to even protect its moving average when there was a selling pressure, which we saw a few weeks back, but ICICI Bank has managed to bounce back sharply on the upside. And I think this stock should reach towards the previous high of 880 level. So these are the top three picks that I am going to suggest him to invest into.
All right. And
if you look at the stock and if you are comparing it with the rising number of Omicron cases, I think that's not the right thing to do, because despite of that, I am seeing a consolidation or a triangle pattern forming on the stock. And the stock has already shown a very good run up of, as you rightly said, 100% in just less than a year's time. Now, post that much of a return, you expect the stock to consolidate, right? And now I think it should start outperforming again, and we can see the targets on the upside, which is around 115 levels. So hold on to the stock, maintain a stop loss of 84. Do not expect magic to happen instantly. Even if there are rising cases, this will be a temporary phenomenon, because we have seen it in the past also, how things started opening up, and that should again be the name of the game. So hold on to the stock and expect a target of 115 eventually.
Oh, absolutely. This unlocked trade and the plays around it have been quite the idea. Right? Stocks on CNBC TV 18, and still with us, Ashish Kyal, a wave strategy as well.
Yes, Krishna Institute has been finding good support around its averages, around the daily averages, and bouncing back from there. The trend is not very strong, but nevertheless, within the given that the sector as a whole has not performed much, but Krishna Institute has still moved from 1100 levels to around 1500. So that's a decent enough outperformance, I would say. So continue to hold on to Krishna Institute, maintain a stop loss of 1350 for the target of 1550 on the upside. See, he has invested at a very decent price, because the stock also went towards 680, but his buying price is very decent. So I think he can definitely hold on over here. We are seeing some kind of a consolidation after the sell-off that we saw in a few months back. And post this consolidation is over, we can expect again the uptick to start. So continue to hold on to Laurus Lab, maintain a stop loss of 460, and as long as that level is protected, I think we should be able to see 620. So he can book out at a much higher level from current level.